Welcome back. We're still talking about commodities and focusing on developments in the oil industry. Of course, Okpeyemi Oguntade joins me now. She's a senior investment officer with Financial Derivatives Company. Good morning to you, Okpeyemi. Great to have you on the show.
Good morning.
So, oil prices have continued to decline further. Where is the bottom?
That's an interesting question. I mean, you have different analysts projecting different prices. And the bottom right now, based on analyst projections, is that the one from Standard Chartered. They're projecting that oil prices will fall will go to as low as $10. And their projection is based on the fact that the fundamentals are looking weak. But aside from the fundamentals, they are also looking at the fact that it appears that oil prices are more sensitive to financial flows driven by changes in asset prices in the equity market. And they believe that oil prices will have to go as low as $10 before asset managers will concede on the fact that the matter has gone too far and they need to adjust their placements to bring back oil prices. But if you're looking at other projections, you have Morgan Stanley and Goldman Sachs. Goldman Sachs projected $20 sometime last year, and everybody was like, "What? That's completely impossible. All prices can't go as low as $20." And today we're having it at $30. Even touched $29.93 yesterday before coming back up. And then you come to Royal Bank of Scotland. They're projecting $16 to a barrel, and in fact they're telling everybody, you know what? Sell everything, any sort of investment you have. The market is looking gloomy everywhere. Just sell it and only have high quality government bonds, but sell every other thing off. And it makes you think, okay, high quality government bonds. Nigeria's government, are we high quality? I mean, we're just a step above being in, the junk bonds.
Yeah, because they removed us from JP Morgan's and GBIM. Barclays has also removed us from its bond index. So all of this is playing at a time when we really can't be sitting pretty.
No, we can't. So I guess the question is for the Nigerian government is, what can you do to make your economy look more attractive? Because your credit ratings are choosing where you should be based on your source of revenue for one, as well as your policies that have been adopted. And our source of revenue being at $30. And then we're looking at our policies. Okay, the decision to gradually phase out fuel subsidy is a good one. But if you're looking at our forex policies, it's not exactly investor friendly. So, I mean, Nigeria really needs to sit up and look at the forex policy, especially. So
let's look at the oil futures impact analysis, the optimistic scenario painted by EIU, saying that for the first quarter they're projecting oil at $48 per barrel.
Yes, I was a bit surprised at their projections, because I mean, if oil prices are already at $30, why would you think oil prices go back to 48? But I guess their projections are based on the historical trend coming from last year. I'm sure their next projection coming in for February, they definitely wouldn't put it at $48. I mean, if you have oil prices at $48, which is good for Nigeria, it means higher revenue for us, it means higher forex earnings, it means, we don't have to be so, uptight with our policy. We can, we can breathe.
The fundamentals that we saw January at this time last year are totally different.
They're completely different.
At this time last year, we weren't dealing with issues of credit or seeing global stock markets taking the major plunge that they're taking at the moment. So we saw a kind of some sort of stability. And so it was okay to project that oil prices could likely stay at 48, even crossover to $50 a barrel, but not with the way we are at the moment.
No, it definitely not. We can't get $48 within the first quarter. It's not. I mean, Iran may come back into the market next week, Monday.
Exactly. So that was like, that's the
within a week, they're already with 500,000 barrels.
So the fundamentals are totally
is completely unrealistic. It's completely out of, it's out of line.
So we might be seeing oil prices dropping to as low as 20. The projection is 20, so it could come down to as low as maybe 10, according to Standard Chartered. Yes, that's a very pessimistic, scenario. But then, in light of developments, it is possible that we could get that low.
It is possible.
So we've crossed the $20 per barrel possibility or thought. So we're now imagining getting to as low as 15 and even $10 a barrel.
Yes, we have, based on what is currently happening. And if you're looking at your U.S. crude inventories as well, I mean, the U.S., despite the fact that they've had a significant decline in their oil rigs, their crude inventories are still going up significantly. Last week, inventories went up by 293,000 barrels against analyst projection of a 3.9 million barrels drawdown. And then you have the fact that based on what Morgan Stanley and Goldman Sachs are projecting, they're saying, look, if you're looking at the storage capacity of the US, it's about 79 billion barrels, and now they're currently at about 63. So storage capacity is already getting close to its cap. And you also have the fact that they've lifted their oil export ban. So, I mean, $20, $15, it's looking realistic. Before, it wasn't looking realistic for now.
So just remind us again how this is going to affect us in Nigeria.
Nigeria, well, for Nigeria, first of all, if we're looking at it from our revenue aspect, our revenues are definitely going to come down. We're definitely going to have more issues from the forex earnings side, meaning that oil is one of our major sources of our forex earnings. And then, obviously, if you have an issue with forex earnings, it spills over into your naira. You know, naira got to 300 naira to the dollar. I mean, it's not looking too good for Nigeria. And if you have that as well, I mean, the government has to increase its borrowings because they need to, you know, finance their expansionary budget for 2016. And if you're not getting, although they've already indicated that they have no intentions of, you know, well, not that they have no intentions, but they are not going to be so dependent on oil revenues. They're going to look for other sources like, you know, being more effective in their tax collections as well as international and domestic borrowing. So on the borrowing side, it's definitely going to increase for the government.
Oh, well, we'll keep our eye on those developing topics as well, which is quite, it's trending at the moment, very, very seriously. And just like Bosun pointed out, the list people you expected to have interest are now interested in what's going on.
It's no longer football.
No, it's not. Now it's about what's going on in the oil market and the currency market. Well, thank you so much, Okweyemi, for coming on the program.
Thank you for having me.